Right, all day we heard these noises about the president and the infrastructure bill, considering $1 trillion one. I mean, what does that do for the market? What does it mean? First, let's be clear. We don't know if the president will actually roll this thing out, and even if it does, Congress will probably kill it. Republicans in the Senate hate spending money. The Democrats in the House, they don't want to hand Trump a victory a few months before the election. But for a moment, let's just fantasize. Let's consider what $1 trillion of infrastructure spending would mean for the stock market and try to make some money off of it. Immediately, we'd see a surge in orders for Vulcan materials and Marietta materials, the two biggest and best aggregate companies. Think asphalt, concrete, crushed gravel, everything you need to build roads. Both these companies are very, very strong, and they've always done well, even when they only have a trickle of orders from state governments. I cannot imagine how profitable they'd be with $1 trillion infrastructure package from the federal government. If you want to own one, I prefer Marietta. They blanket the South, have the ability to go north and east, and even far west, though their exposure there is weaker. I like Marietta because even if we don't get an infrastructure bill, you'll do very well just from the great state projects that they do, and because the home building related business. Home building's on fire. You might have listened to Stuart Miller today from Lennar. Remember, beyond roads, aggregates are all about housing development. So right now, housing's red hot. Who else wins if McConnell and Pelosi play ball on this? There are always buyers of U.S. concrete, which is why it surged 22% today. Honestly, I don't trust this one. U.S. Concrete's been a serial disappointer. If you bought it every time we had a whiff of the possibility of an infrastructure bill, you would have lost a fortune. It spikes, then it goes right back down when we realize there's no legislation coming. Without massive federal spending, U.S. Concrete's hostage to gigantic office projects and bridges. Even though we're coming out of recession, I don't expect those kinds of projects to bounce back anytime soon. Now, I know people like Caterpillar as an infrastructure play, but today's 6-point rally comes at a time when Cat's larger business, oil and gas, is still in a house of pain. Witness Chesapeake Energy's sickening slide toward bankruptcy. Caterpillar doesn't work without a bill. Too risky for me, at least from these levels. Better to own United Rentals, though that rally today took away a lot of upside. Then there's the truly logical pick with less risk. It's called Nucor. It's the best steel maker on earth. I like Nucor because it's a buy no matter what. And even with the stock up nearly more than 6% today, it's still down roughly 20% for the year. I've been eyeing this one for my charitable trust because we sold it in the 60s. Now I'm bragging. Not that long ago. And then it collapsed to the 40s when the recession hit, and I'd like to come back in. It yields 3.6. Finally, the original Bloomberg report mentions that the president wants to build out the internet, including 5G. We recently heard from an outfit called Fastly with a really good stock, content delivery network that makes sure the applications you use over the web actually run smoothly. According to Fastly, millions of lower-income Americans still have garbage internet access that's too slow for work or school. Can you imagine if this COVID thing continues? What, another handicap for these poor people? I'm not sure how you'd play an internet infrastructure build-out, but I think it would be a great idea. Sadly, all of this seems like a pipe dream right now, but maybe, just maybe, Congress will surprise us and agree with the president because it would be good for America. I want you to stick with Cramer and stick with CNBC. I'm going to give you a little sneak peek of what my buddy pal friend Scott Wapner, a Redskins fan, maybe they play, has on tonight.
Tonight at 7 p.m. Airlines toughen their stance on requiring passengers to wear masks. So how safe is it to fly? Plus, the head of the nation's largest African-American-owned bank on today's challenges from his perspective. And how a Miami nightclub and restaurant owner is combining the two to get people excited about dining out again. All tonight at 7 p.m. with Scott Wapner. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.